National Aluminium, or Nalco, was forced to shut down one of its plants over the weekend after it ran out of coal. So is the black gold really in short supply, or is it just another instance of supply mismanagement? The cement sector, as Neeraj mentioned, may not be out of the woods just yet, with costs escalating for two of the country's largest cement makers, ACC and ULTRATEC Cement. Why then are brokerages so upbeat? And what should one make of the Revenue Secretary Hasmukh Adia's comments asking for a relook at GST tax rates 4 months into the new indirect tax regime coming into effect? We're going to examine all of that over the next few minutes. Here, you want to kick it off with that Nalco plant shut down on the back of a coal shortage?
Yeah, so that news came in over the weekend, and of course it raised questions about what's happening on the coal side. And it prompted us to look through the data to try and understand, is this really a coal shortage? Is this a Coal India problem? Coal India often becomes the whipping boy in these kind of cases, or is there something else going on? So you can look at the data from various viewpoints. You get it from various sources. So one, you can look at the core sector data. If you look at the core sector data, you do get a sense that there is a gap between the pace of growth, and just hold that graphic, pace of growth on electricity generation and coal output. You can see those numbers on your screen. Clearly, electricity generation has been growing at a faster clip than coal output. But remember, electricity generation now in the revamped IIP and core sector data also includes renewables, and renewables is no longer a very small part of electricity generation. So electricity generation includes thermal, it includes hydro, it includes nuclear, and now it includes renewables. So all of that combined is growing at a faster pace than coal output. So just looking at those two data points, you can't conclude that coal output has been growing at a slower clip, and hence there is a coal shortage. Come to the second data point. There has been a shortfall in the targeted hydropower and the nuclear power production. That is data coming in from the CEA. So there is some shift in demand from hydro and nuclear towards thermal. So there is a possibility that thermal power output is growing a little bit faster than what Coal India would have budgeted for, and hence there is some shortfall coming in the coal availability out there. But if you look at Coal India's numbers per se, and Coal India on their website very clearly give you their annual targets, both comparable and full year, and that tells you that while there is a shortfall, there isn't a very dramatic shortfall. So I think their targeted numbers for the April to September period were about 243.3 million tons. They've done about 231.87. Yes, the year-on-year growth is 0.8%, but year-on-year growth includes base effect, etc. If you look at the offtake numbers, again between the target and the offtake, there is a slight shortfall. So I don't think the problem is in terms of Coal India producing far less coal than what they were expected to produce. There is some shift in demand from other sources of power into thermal, which means that there is some shortfall coming in. And then the second aspect, most certainly from the numbers and from the commentary that is coming in, seems to be a little bit of inventory mismanagement. In fact, just as this whole conversation started up, you did see coal ministry officials go out there and give interviews and talk about the fact that a lot of these power companies have been keeping inventories at minimum levels. There is a CEA, suggested level of coal inventories, and it seems they have not been maintaining those levels. So Coal India stocks stood at about 7.2 million tons as on October 19th. This is again CEA data. According to the Hindu Business Line, this is a 25-year low. But on the back of that 25-year low, you had the power secretary telling Economic Times that power plants are deliberately holding stocks below CEA norms, and the reason for this is cost management and trying to make sure that they don't spend too much on inventories. So it seems like it's a bit of both, a little bit of shortage because demand is shifted towards thermal, and a little bit of inventory mismatch.